Hey traders, it's Eric. Welcome back to the channel. This is a quick recap of an SPX 0DTE trade I'm actually in right now. I'm making this video about an hour after the open, and I'm using a method I've been developing or working on. I loosely call it forest trading. And the goal here for these type of trades is to reduce my risk by setting up various credit spreads, sometimes butterflies, that create a mostly green risk graph. And I'm going to call this the grass, and then we occasionally have a tree. As we can see, this might even be more like a bush, but you guys get the idea. Again, we're trying to create the widest or largest profit zone we can, so no matter where SPX closes later in the day, I will be green. Now, this is still a work in progress, but I'm sharing what's working along the way and going to be including some different methods on how I'm getting into these trades. So I'm actually in this trade right now, and I want to start with what am I looking at before the market open. This is where the alpha crunching forecast comes in. This was a Friday, the week of June 2nd. So this is actually Friday, June 6th. And what it does is it breaks the market into 5-minute increments for each day of the week and tells you, the tendency of the move for that particular 5 minutes. And then it creates a line graph to give you kind of an average movement. Now, this can vary week over week. I'm actually working on more metrics for this. So this is kind of daily forecast 1.0, 2.0 is coming soon. But when we look at Friday before the market opens, we can see that the first, let's call it half of the day, all the way up to 12, 1 o'clock, is really just choppy, right? I used to think that this might be a good time to trade an iron condor. And I've gotten away from that because obviously in this day and age with Trump and Elon and the Fed and Ukraine and all the things, there's a lot of headline risk out there. And the risk reward for a 0-day iron condor is very high typically. And it's really just not the type of trade I want to get in. I want to get into that, as close to risk-free as I can. So we're going to look at how I did that today. But essentially, I'm going into the day with the market's been very choppy the first half of the day. So we're going to look at how to try and make money, get into trades early in the day so that we can be risk-free. And then actually I could walk away right now and I would still make something today, right? So that's pre-market. Once the market opens, let's talk about what happened today. Once the market opened, we had a really big gap up today. We had a big sell-off yesterday. I don't want to get too much in the headlines and all the things, but we basically had a big gap up. And we rallied up and we're kind of in this oversold zone, and you can use your own indicators. This is just kind of a range indicator I like. I'll put something in the description if you're interested. But essentially we rallied pretty hard, and I was looking at this big 6,000 level, and I'm really just looking at, okay, when can I get into a call spread? And I'm just going to look for a little bit of a mean reversion. I thought maybe we would come back to gap window, or maybe we just get a pullback to 6,000. We ended up getting the pullback to 6,000. But what I want you to notice, first of all, is how many points it took to actually make this trade. Meaning I didn't need a huge move to get into that risk-free trade. So I entered the trade here at 9.52. We'll look at the order and the strikes and everything here in a second. I took the trade here at 9.52. I sold a call credit spread. I sold an in-the-money spread we'll look at in a second. I sold the 6,000, 6,010. And all I needed was the market to move down about 10 points or so. And then I could sell an offsetting put credit spread to lock in this 10-point gain and create that profit tent we just saw. So this is just kind of technically what the market looked like. I'm not really watching this all that much, but I'm really just looking for, okay, when is it kind of exhausted? Okay, 3 green candles. Now the candle's red. All right, I'm going to get into a call credit spread, low risk from a dollar standpoint, and look, can I get a move in my favor? I got the move. I locked it in, and I'm basically done for the day. I might actually look to get into something else after making this video. But let's go into back to Tasty Trade and look at the orders just so you can see it. The very first trade I sold at 9.52, I sold the 6,000 call and bought the 6,010 call for protection. This is a 10-point wide spread, and I got a credit of $6.35. And then the put spread that I got in was the 59.95, 6,005 put credit spread for 435. So you'll notice with 10 wide spreads, if you add these together, you get a total of $10.70. So that is the credit that I basically took in. So that is more than the width of that spread. That's how it becomes risk-free. So if we take a look at the risk profile, now guess what? That anything over $10 in credit for these two spreads is my minimum gain. That means I cannot lose on this trade now. So I want to look at the strikes here. So again, I sold the 6,000 call and bought the 6,010. And then at the second entry, I sold the 6,005 put and the 59.95 put. Now, this isn't quite a butterfly. It's an overlapping butterfly, if you will. Let's look at the table so you can see kind of what this looks like. I overlapped it a little bit. I originally had the 6,000 and 59.90, but I wasn't sure I was going to get enough move to make it risk-free. So I overlapped them. And basically, I have a wider profit zone now. I have a 5-point profit zone, max gain of $570, and up to 300 or so in this zone, and then a minimum profit of $70 on the outside. Now, what I do want to show you is what the very first entry looked like before I entered the second. I took a picture of the risk profile. So that original credit spread, call credit spread I sold the 6,000 and bought the 6,010. If you'll notice, the market was trading at 6,010. So this was an in-the-money call spread that I received a credit of $635 with my max loss at $365. So even though I'm saying, hey, I'm in a risk-free trade, the risk-free does not start when you enter your first trade. There's always risk. You have to get the market in your favor to lock in the gain to create the risk. So you're not going to have a single entry and be like, oh, I found a risk-free trade. That's not quite how it works. I originally risked $365 to get into the trade. So had the market just kept rallying, I would have lost. I would have either stopped out or basically had a loss. So this method is not risk-free in the sense that you're not taking on any risk. You are taking on risk, but what we're doing is adding other trades to lock in the gain and then remove the risk. So I'm adding risk. You'll notice that now the profit below 6,000 is completely, minimized, where originally, now if the market totally sold off and we closed down here, I would have made $635, but I don't know that that's going to happen, right? I have no idea what the market's going to do. I'm just trying to get into some low risk, high opportunity trades as the market chops around. So what I did by selling that put spread is I took this risk off, but I removed it from the profit on this side. So by adding that put spread, let's go back here. By adding the put spread, I now have risk on the downside, but the gain of the call spread was enough to cover it. So these are offsetting trades, not quite a forest, if you will, with multiple trees like I had in a different video. The day is young. I still have several hours. I could, if we sell off outside of this zone, then I could look to maybe get into another set. And actually, that's exactly what I did. I just got into a new entry, and I wanted to first show that this is where we left it, where I had $70 of risk outside the butterfly tree zone. So I took 25 of these dollars and bought a slightly out of the money put fly to give me some more profit zone down here. So let me bring those in and show you what it looks like now. So now I still have green grass everywhere. However, my green grass is now only $45. That's the least I will make today. Granted, there are commissions with all of this, so I'm really leaving this to cover commissions. But if the market does sell off into this big 59.75 strike, I have a decent profit zone down there. So maybe this is technically a forest now. This is where I landed. So we'll see how it goes the rest of the day. I don't think I have enough risk-free to enter here. However, if we rally apart, I may be able to get into something else where I'm legging in to create more profit zone. But right now, this is pretty good. I'm feeling good about this. I have the big numbers covered, 6,000. I have 59.75, and we'll see where it lands.